Well, why is business credit so important? Well, as any business will learn that without credit, they have a difficulty in meeting their needs. Basically, with business credit, it's their lifeline. With what they need to grow their business, research and development, staffing, any need they may have, it frees up their cash flow so that they can keep their cash for daily expenses, but they're able to use credit to do these other things to make their business grow and develop. How does one obtain business credit? Well, there's several ways that you can obtain business credit, but the first thing you'd want to decide on is, what is your need? What is the need for credit? Are you looking for a short-term, long-term? Is your business seasonal? Is it something you're looking to do? So the type of credit that you're looking for is very important to figure out. What is your need? What do you need the financing for? Basically, to find out what kind of knowledge that business owner has or what kind of experience they have is very critical. They know and understand their need of what they're trying to do with their financing. And so as a business owner comes in and sits down with me, to feel comfortable lending that individual funds, I need to know that they're knowledgeable, they're experienced, they understand the type of business that they are developing or starting, and just making sure that they have a clear plan of where they want to see their business and grow it, and how they plan to grow it. So having a clear understanding of where they're going is very important. What is the single most important thing a new business owner needs to know about getting financing? Is to know that it's not easy, that sometimes a person will walk in off the street and they'll just think that we're able to give a loan just having them come in and say they want to start up a business. So what they need to understand is that they have to really research what they're doing, have a good business plan, a plan of what they want to do with this business, and also make sure that they understand that they're going to have it's going to be a challenge for them, that they're going to have to put in a lot of work and a lot of time in developing this business, but also know that they're going to have to probably come up with a lot of their own individual resources first before a financial institution is willing to lend them money. Basically, we like to see the individual put themselves out there first and to make a go of it. We see a lot of times, well, we know that new businesses, that 50% fail within the first year, and usually 95% fail within the first 5 years. So as banks, we're very cautious in our lending, and so for them to have that expectation as they come in, to think that we're going to just write a check for them, that's usually kind of a shock to them. And so it's important that they know that usually we're going to ask them to put up their own resources first. What is traditional financing? Traditional financing is usually a financing done by the bank itself. Usually what we look at, as far as time in business, we're looking for at least a business that's been in 2 years. Now that may differ when you go to another institution or a different bank, but as far as our policy and procedures that we follow for traditional funding, usually they need to be in business 2 years. What that 2 years does is gives us a track record or a historical information as far as finance, how they cash flow, how they're running their business, how are they keeping costs down, what are their revenues, that type of thing. So we actually have a history that we look at, versus a startup company where we have no history at all. There we're able to see, is this person able to manage this business? Are they able to keep things going and kind of see where they're headed? But usually having a history allows us to feel a little more comfortable in lending money to a business that's been in existence for a couple of years. If there's a business that's been out there for a year or less, our recommendations are, the SBA is an option out there. There are different SBA loans, 504, 7A loans that help new businesses, startups, that type. So if they've been in business less than a year, usually we recommend that they look into that and to see if there's something that they can have. Usually, after a few months of business showing some kind of income revenue, they can take those financials and look at those, or look at that financial information and see if we feel that the business seems to be going in the right direction, that with the SBA guarantee we could go in and possibly do a small line or loan for them at that time. What one piece of advice would I give an entrepreneur starting a new business? My piece of advice is you have to love what you're getting yourself into. You have to be committed. You have to be completely enjoy what you're doing, because that is, you're going to give everything you've got to get this business up and going, and it takes everything, long hours, time, research, development, contacts. I mean, it's just all encompassing of your life. It'll take over your life in trying to develop a new business. And so if you don't love it, then you're going to have a difficult time succeeding in getting that business up and going. So to me, my recommendation is to get something that you enjoy doing, that you love doing, and you will make it work. You'll make it succeed as long as you have that drive. What other sources are available? If there's no business credit available to an entrepreneur or a business owner, usually we recommend that they turn to family or friends. If you've got a great idea and your family believes in you and in what you're trying to do and develop, a lot of times we recommend that they use a family or a friend, or there's also outside investors that are willing to invest in companies. You just have to research those to find them out. Also, another option is if you're looking to buy a business that's already in existence, possibly look at a seller carry contract or a seller note, where they'll carry the contract for you for the first couple of years. Critical that you get information so you know how that business is done as you do your research in buying that business. But a key is, if this person's willing to sell you the business and they're willing to carry a contract to you, it's a great option. If you can't qualify or can't get business credit, that you work out some kind of a note payable to that seller and carry that for a few years, and then we can step in a couple years later and do some kind of financing for you and pay that person off, or whatever the case may be. So those are a few options.